Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, really the last big earnings day of the season, I guess, of the year. We've got a number of stocks we want to hit on that are reporting this morning or yesterday after the bell. Probably hit on this Time Warner AT&T lawsuit. Very interesting implications for the rest of the M&A in the space that we kind of touched on yesterday as well. Our guest today will be at 8:15, Marc Chaikin. He's the founder of Chaikin Analytics and a 50-year vet of Wall Street. Knows a thing or two about what's going on in the markets. Joel, what's doing this morning in the S&Ps?
S&P futures are trading in the green by 8 solid points. Pre-market high 90.75. Folks, our old-time closing high is 25.91 and our old-time high 25.94.50. You have crude trading in the green by 12 cents here at 54.54. Just kind of digesting that break that it had off the $57 level. Gold got shellacked yesterday, but coming back up 270 at 1278 even, and silver up a dime under 17 bucks at 16.95. And what everybody cares about, Bitcoin is trading higher again despite two hacks at 82.44. Dennis, should we change our name to the blockchain pre-market show?
You gave away our joke too early.
I'm sorry.
You gave away our joke too early. Joel just gave away the punchline before telling the joke. But it wasn't even a joke. You were going to tell us about this new stock you got. And this is actually a real stock there. Tell us about the stock that you discovered here that is trading out there.
Well, I'm not sure I discovered it, but it's been discovered. Riot Blockchain traded up yesterday from 8.13 to 10.35, trading up to 10.70 in the pre-market. Spencer, tell us about the new stock that's going to be added to the S&P 500.
That's a joke.
That is a joke.
That was a little bit much. I would say, yeah. I don't know if Joel discovered this, but Riot, I'm sure if you are an investor in the Bitcoin or blockchain space or a trader, you know, or have at least heard of Riot. Riot Blockchain in the past month. The company formerly known as Bioptics, BIP was their old ticker, and they changed their name on October 4th to Riot Blockchain, and they went from a biotech company and they sold off all their patents, and they are now an investor in the blockchain and digital currency space.
So what did they do before?
They were let me get specifically what they did. They made diagnostic equipment.
And they've just decided to change everything, and we're just going to invest in Bitcoin.
Yes.
Or the blockchain, basically.
Essentially, yes.
That's smart. Look at the stock. It's going to blast off into orbit. I mean, here all of a sudden, hey, we got another way to invest in Bitcoin here. Riot Blockchain. I'm telling you, man, I've been saying this for a while. You know, Square just says, oh, we're going to accept Bitcoin. It's been going straight up ever since. You mention Bitcoin that you're interested in, or you change your name to blockchain, you'll find buyers. And it's no joke. This stock is finding buyers. So maybe, you know, it's a little bit interesting, you know, that they've changed the whole business model, just all of a sudden become investors here in Bitcoin. But I tell you, that's what the investors, that's what Wall Street wants to hear. They want to hear anything to do with Bitcoin. They want to hear anything to do with blockchain. This company went another level. They put blockchain in their name. Called them Riot Blockchain, RIOT. That's smart. These people, you know, the management's smart here. They're taking advantage of this. And you know what? I don't know when the dust settles where this thing is, but I'll tell you right now, anything to do with blockchain is hot. I won't be shorting the stock, and I'm interested in it. It looks like it's going to go. It looks like it's trying to challenge a tie back on when it was $11.17, back October the 11th. So I wish I would have known about it a couple days ago.
No, I almost called you yesterday, and you know how I am for technicals, right? And I don't know how I came across, maybe I was looking on Stock Twitch. I don't know, but I come across this stock. And I look at it, and what was significant to it is that, it initially had a run up here in October, and it ran up to 1017, on good volume, 2.5 million. And, sold off here to the $7 level, kind of like a Harlan Pine, return to the scene of the crime where you break out, jigged, moved around in that area. And then I was looking at it, and this was earlier in the day, and I'm like, wow, the volume has really picked up the last 3 sessions. Normally trades 2, 3, 400,000. On Thursday, it traded 800,000. Wednesday, 800,000. Thursday, 1,200,000, and then 1,500,000 on Friday. I looked, this might have been like 10:30, 11 o'clock. It had already traded nearly 2 million shares. And I'm like, someone's getting onto this thing. And what do you know? It ended up trading 5 million shares, traded up to 1050, 1035 close. You have it trading up in the pre-market here. Folks, I know I give a lot of short recommendations and try and pick the tops and a lot of stuff. This is one I'm not picking the top in. This thing could be a
not when you say
rocket
blockchain.
ship.
And
Yeah.
I think when the dust settles, who knows? I mean, let's look, this actually is just looking at the long-term charts. This company's been around a long time. Came out, we can look back at the charts here. Back in June of 2010, I got a $111 price on this thing. So this thing was a lot higher at one time when they were doing something that obviously wasn't working for them. And that's why they're trying to find something that works for them. But you're talking about a very small company. You're talking about a company with a market cap of 86 million. This is super highly speculative and investing in stuff that is speculative, obviously, still. I don't know how their investing tactics work. I don't know anything about, this company other than that Joel just mentioned that they got blockchain in their name. And I'll tell you, it's good enough right now for this market. You got blockchain in your name, you can blast off into orbit. So I'm at, I'm going to keep this one on my watch list. And I might even do some trading in this. Investing? No, not for me, because I'm not investing in Bitcoin, and I'm definitely not investing in a company that just, taking advantage of the theme here. But that being said, stock is hot right now, and it's got blockchain in its name for real. So
I got more price history, Dennis. I got more.
Give it to me.
This is another thing that's going to make you put it in your portfolio.
I'm gonna put it in my portfolio.
It's a reverse splitter. Okay.
Oh, it's one of those?
Yeah. Reverse.
Little death spiral financing for you.
I wish Brett and I tried to look up the short interest. We couldn't find it, but I have this IPO in February of 2003. The closing price on the first day of its IPO was $971, and then it rocket shipped to 3,637.40.
Wow.
That was in October of 2007, and then it came. It's basically been dead money since 2012, made an all-time low at 844, and here we are.
When did they do this whole conversion? We're going to stop doing diagnostic, products or whatever, and because it's not working for us, and switch to investing in Bitcoin. When did they do this, Spencer? When did they officially announce that? When did they change their title to Riot Blockchain?
They announced their name change on October 4th.
Oh, this is recent.
Oh, yeah.
Yeah.
Okay, so October the 4th, the stock went, oh yeah, look at this. October, people got the memo like on October 2nd, this is going to happen. Starts going up, they're going to change their name to Bitcoin or blockchain. Stock goes from 5 to 7, 7 to 8, and then up to $8 to $9.50 that day. Peeled off a little bit, but it's been a consolidation station here for a month. You know what? Nothing's hotter than Bitcoin right now. And as much as, I've, not been a fan of Bitcoin because I said I can't understand it. I haven't really said I'm bullish. I haven't really said I'm bearish. I said I just not for me. That being said, you are in this, market here that, the Momo, when you have the momentum on your side, it continues to go. And here we are coming into the end of the year. How many portfolio managers out there maybe want to add a little Bitcoin to their, portfolio there by the end of the year? I think that bodes well for December for Bitcoin. So I know nothing about it, but I think Bitcoin 10,000 could be in the cards by the end of the year, just because. Not, fundamentals, because I can't analyze it fundamentally. I don't know how. And I've asked people that question. They don't know how either. But when I look at it from, or from a valuation perspective, but when I look at it just, from a thought process, if, there's portfolio managers out there that, thought that they could own a little bit of an alternative asset, and you got a month to go before the end of December. Maybe they want to have that in their portfolio at the end of the year. So I think there could be some more love for your Bitcoin there, Joel, in the next month, and that could equal love for Riot. So I'm bullish this Riot short term.
Before we move on, Dennis, I just we've been having fundamental discussions on this. We had that great call, I believe it was on Friday, and also Friday on the show we had Ian Weiner on. And remember, in two things, Ian Weiner and then the gentleman that we spoke with on Friday, who's going to be a guest at our show, they both said one thing that was very significant to me. And that one thing was they related it to the tech bubble. Remember the tech bubble, right? And, you had the huge appreciation in price, and not everyone made it, right? And a lot of things came crashing down. But that really established, a new, I don't want to say asset class, but, it established new companies, right? Not all of them made it. And that's one thing Ian Weiner said. He said, he doesn't know if it's going to be Bitcoin, or he doesn't know if it's going to be Ethereum. Yeah. It's changing the way we, do transactions. It's changing the way it's getting into some of these bank profits and stuff. And maybe it's not
They're
Bitcoin.
Trying to shake up the industry.
Exactly.
And the bankers have had a monopoly, obviously, on all these transactions forever. So you think, the whole idea, I guess, behind the Bitcoin is to take out the banks and say, hey, we don't need them. We can do this ourselves. So that's going to be a tough row to hoe, though. I'm going to say that, there's going to be a lot of hurdles for them to get over to get to that point. Obviously they can already do transactions, but it's expensive too. I mean, you got to verify all this stuff. We know it costs, a whole lot to mine one Bitcoin. And, there is some, other considerations there as well. I'm going to go back to my thesis though. And I think, short-term December looks okay for it just because, my thought process, not a lot of portfolio managers own this. And maybe they're going to want to stick some in by the end of the year, but I still don't know how to value it. I'm not confident, unless somebody can come and give me another way to pencil crunch and, give me, a way to actually look at, profits or look at something to figure out how to value it. I can't jump in it on my own just because it's not for me. It's not for me until you can show me, okay, well, they can, this is worth so much money. So that's why Bitcoin is trading at $8,000 and it's hard to do. So, that's why I'm out on it for my own personal self. That doesn't mean I can't have an outlook on it. I'm just saying in December, I think you could see it go higher here yet.
One final word on Riot. Your January 2015 high is 1572. I'm not sure if we're going to hit that today or tomorrow.
Or tomorrow. You're calling the stock go up 50% here today. I wish I would have known about this a week ago. I actually might have bought some of this stock just because they got the blockchain. I was saying that. I've been saying that's all they need to do.
I'm sorry.
Needs to do. Macy's needs to change their name to Macy's blockchain, and the stock would be $50. That's what General Electric needs to do. Why don't they change their name to General Blockchain? I'm going to call General X. I have those shares. I'll vote my whatever number of shares I have and say I want you to change your name to General Blockchain, and I think I'll get my money back.
I mean, look at Square.
I like that name, General Blockchain. It sounds tough, doesn't it? General Blockchain, General BC.
Oh, they're going to change their symbol
to just what are we going to change it to?
GBC.
GBC.
Is there a GBC out there?
No, it's not. General Blockchain.
Okay.
It could work. It could work. Man, we're solving GE's problems here right now in pre-market prep. I hope GE management is listening to this. Get into the blockchain, GE. This is your way out of the doldrums. Speaking of GE, we've been on a 15-minute tangent about, Riot. I saw the Deutsche Bank analyst came out here, Spencer. He came out here overnight and lowered his price target on GE once again. The guy that started the party back up $29. Our hero, Inch, was talking on GE. Do you have that?
John G. Inch. He lowered his price target to $15 on GE.
And why? Did he cite reasons or anything here?
I haven't seen his reasons.
I heard something about debt.
Yet.
Somebody was saying something about, they think debt downgrades are coming. Which, gives an argument to my short preferred case too, or short, the debt.
Are those things moving at all?
They rallied. They've come back. I mean, now there's, all the meat's back on the bone here. I like them up here short. GEB, GEH, GEK. The one problem is they're really expensive to borrow in most brokerages, so you got to check that out. But GEB, GEH, GEK, that's a nice way to play. If you think GE is in real trouble here, you think the debt's going to start going down, you think it's going to continue lower, There's a whole pile of meat on that bone with no risk on these. I mean, in a best case scenario, these things are going to go up to like 25.50 price. So it's like 40 cents upside on this GEK with a little more downside if it ever got into real problems. Now, we don't have real problems at GE yet. They're still making money. So maybe I'm early to this trade, but I've been playing these a little bit short and looking at, possibly adding to it here as nice little rallies come.
And just forget, do not forget end of the year tax selling, tax harvesting. I mean, if you want to talk about a candidate in this bull market,
he's going down in the next month, I would say for sure. Unless, somebody comes out and says something really awesome about it. That is a candidate. I mean, I'm a candidate to sell my GE position just because everybody's made fun of me in the chat for having it so long. I just want to get rid of it so I don't get made fun of anymore.
All right.
What about everybody else that has it? These portfolio managers go to these cocktail parties in December and say, oh, yeah, I own GE. And everybody's laughing at them at the table. Well, okay, I'm going to sell that thing too. You're going to get my tax loss and I don't get made fun of anymore.
We are going to be talking about end of the year selling and a little bit of Bitcoin and blockchain stuff with our next guest, Marc Chaikin. Chaikin Analytics is his site. We'll be right back with Marc. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick, and we're on now with Marc Chaikin. He's the founder of Chaikin Analytics, a 50-year vet of Wall Street, so he knows a thing or two. He's seen a thing or two. Marc, have you ever seen something quite like Bitcoin? Because we just talked about that for 15 minutes.
1995, I was just talking to someone. There's an analog. We're very close to the pattern that we saw in 1995. And if that holds, that suggests strength into year end and into 2018, which a lot of people are skeptical about.
All right, I want to ask you a little bit about Bitcoin and blockchain related stocks, because you've been watching Overstock a little bit. This is one that we've discussed on the show in recent days and recent weeks. So what do you think about OSTK?
Well, it's trading just like blockchain or Bitcoin, and this is a great liquid way for traders who think that Bitcoin's going higher to trade without having to worry about which cryptocurrency to buy, where to store it, all these concerns that most people don't even think about. But if you've been around 50 years, you do. So I noticed about 2 months ago that it was trading like Bitcoin. They were the first, one of the first online retailers to accept Bitcoin. Then they very quickly got into crypto technology. And when they announced their earnings 2.5 weeks ago with a loss, they said, we're getting into a new crypto technology, and the stock is trading just as volatile as Bitcoin and very liquid. So I think it's a great trading vehicle, but I stress trading vehicle because God knows, when the bubble bursts, they're all going to go down.
Marc, you made that parallel to 1995. What were you observing then, and what was the instrument?
Well, I was just looking at the SPY, the S&P 500, a very similar pattern, lower volatility, consistent up moves, not a lot of big 1% up or down moves. And this is just what's known as an analog. It's what kind of a comparison that enabled Bob Prechter to call the 1987 crash, to quote an old technical name. And analogs work until they don't work, but it's been a consistent pattern all through 2017. There are other reasons to like the market into year end, namely the fact that we were strong into September, up all 9 months. We've got a strong market and the likelihood of hedge funds selling, for instance, where they're actually underexposed to equities and underperforming, is pretty small. So I think we're going to see the strong get stronger, and what's been working, technology, particularly strong into year end. And I think small caps are also catching up here, which I like. We had a nice 6-week correction in the IWM. We came out of that, closed above its 21-day average on Friday, and we had a really good follow-through day yesterday.
So, Marc, coming into the end of the year now, you just said, tech has been strong. The home builders have also been very strong as well for a couple months now. What overall themes are you looking for the final month or so of the year?
Looking for tech, and as you said, home builders and selected retailers. The consumer discretionary ETF, XLY, has actually made a new high, and that's without a lot of help from Amazon. So why is it doing that? Well, home builders, D.R. Horton, which we've liked for a couple of months, Beazer, Lennar, Pulte Homes, all leading the way. Millennials are coming out of their parents' basements and buying houses. And interestingly, there's a study, this is a little bit of levity. One of the primary reasons cited by millennials for buying houses, dogs. They're not allowed to have pets, typically in rental houses. Their parents are getting tired of the dogs in the basement. So millennials are buying houses so they can have their pets. Very interesting. There are obviously a lot of other reasons, but I think that consumer discretionary is a great play. One cautionary note, Amazon has a pattern of trading strong into Cyber Monday, but then being more of a sideways performer. And that's true of retail in general. It's not generally known that retailers tend to peak right after Thanksgiving, all the excitement about Black Friday and Cyber Monday, but then they're just average performers into year end.
Talking about this retailer trade a little bit, Marc, it's been, obviously we've had earnings now. We're just about through with that, but we've been talking about it too, because it seems like the dogs of retail are back in favor, and we had stocks that are all over the place. We had Foot Locker, we had Macy's, we had Kohl's, all these stocks getting bounces. How are you, or what specific names are you watching in the retail space?
Well, I'm looking at some of the higher end retailers, Ralph Lauren, which is both a manufacturer and a retailer. Tiffany is doing very well. And then on the low end, Ross Stores had a blowout quarter. A favorite of ours in Philadelphia, or rather a local company, Urban Outfitters, after the close last night, record earnings, same store sales increase. That was a big surprise. But as you point out, all over the map, very selective. Guidance is the key. Target reported better numbers, but guided lower for the Christmas season. You've got to be really careful, but clearly there's been some improvement in retailers. The Death Star, Amazon, may have lost a little bit of the laser killing power here. Also, cautionary note, auto parts retailers, which have been very bearish, that's a call we made in April, have bounced. There was a positive earnings surprise from Advanced Auto Parts. You saw a lot of short covering in AutoZone, Advanced Auto Parts, O'Reilly. I'd be skeptical of that. I wouldn't jump on that train, but I do think some of these specialty retailers look attractive here.
Marc, I just want to ask you, actually, the Advanced Auto Parts is one that I was looking at too. You've seen some, pretty good pops, like you said, in AutoZone. AutoZone's come significantly back from its lows there. O'Reilly too is, off. AAP isn't that far off its lows. It had the big pop, off the earnings. It popped up to 102. It's come back down $10 though in the last 5 days, just from where it was. Do you think, these things, and if you look at a lot of these different, retailers, they've all been, just seems like, slaughtered, and I don't know if it's Amazon effect or what it is, a lot to do with it. But, do you think some of these just got too cheap, and that's why we've had the big pop back? And do you think there's some value here in a stock like Advanced Auto Parts? What's Chaikin Analytics saying?
Well, our power gauge ratings were bearish on Advanced Auto Parts. It's neutral now. I don't see value in a stock that's going to earn $5.22 down from $7.15. These stocks still have to prove. These stocks have to prove themselves. Institutional money is still flowing out of it. When it spiked up above 100 there, pre-market, I said don't jump on this train. Now, if it successfully tests the 80 level and the power gauge stays neutral, maybe you buy a little. I don't, Warren
You
Buffett
don't like the
once
earnings
said,
falling.
No, but Warren Buffett said something interesting. It's not well quoted. If you're in a leaky boat, it's better to change boats than to try and fix the leak. And auto parts is clearly a leaky boat.
That's
yeah,
a
I
good
know.
quote.
I saw that.
I like
I
that.
know. Thank you. The problem with auto parts is not necessarily Amazon. I think it's demographics. It's these 7-year leases and the price of used cars. I don't know. Something is not right here. That's why I love our quant model, the Chaikin Power Gauge, because I don't have to be an expert in these stocks. Sometimes you do pick up something that makes sense, but sometimes you just go with the quant model, and the quant model is now neutral, so had been bearish since February, which means at least you got a shot. But I've said many times on this show, bottom fishing is the most expensive sport in America. It's too easy to find winning stocks like DR Horton, like Lam Research, like Applied Materials, like Alibaba. Why put yourself in harm's way? Put your head in the lion's mouth when you don't have to.
Marc, give us a couple of stocks that you're watching on the downside.
Well, Tesla, it's an old favorite of mine. I think, PT Musk has pulled another one of his smoke screens. The Model 3 is delayed at least 6 months into 2018, and he comes out with a semi-truck and a roadster. This is pure PT Barnum at work. They're burning cash, $1.5 billion at a clip. They only have $3.5 billion left. They're going to have to go back either in the debt markets or the equity markets. At some point, those windows are going to close. Very volatile. If it closes above support resistance, you got to close out the short sale. But I see Tesla making a series of new lows. Now, Morgan Stanley today came out with one of those great brokerage firm quotes that you just have to shake your head at. Going to 400, but then going to get cut in half to 200 in 2018. Well, do you want to be in there for the last 15% on a stock that's going to drop 50%? I don't think so.
And any other ones you're watching on the downside?
Cable cutters. So Charter, CHTR. I think that cable cutting trend is going to continue. The success of Roku as an IPO is a sign that the cable cutters are alive and well. You've got some negative regulatory pressure out of the AT&T time deal because of more political than anything. But Charter has a weak pattern, feeble rally. I'd be shorting that and looking for other stocks in the Liberty complex to short. John Malone's magic has usually worked, but doesn't seem to be working right now.
It's
We're on the line with Marc Chaikin of Chaikin Analytics. Marc, I just got to ask you about like the entertainment, industry, slash video, Disney. I mean, it looks like the AT&T merger is under a lot of scrutiny. Disney's tried to recover. You see what's happening at Viacom. I mean, there's going to be some kind of consolidation in this. Who's going to be some of the winners and some of the losers?
I'm going to play home field advantage here. The clear-cut winner to me is Comcast because they understand the importance of content. And so they jumped into the potential bidding war for the Fox properties. I think Disney's got problems just because ESPN continues to be a drain in terms of losing subscribers. And you've got Comcast there ready to pick up the pieces. So I think the place I want to look is anybody who's got content or who's acquiring content. So to me, Comcast is the name. It's a long-term play because there are a lot of different factors. They get affected by cost cutting as well, competing with Verizon in internet service provider. The stock's in a downtrend, so you want to buy it judiciously. It's overbought right now. Want to wait for an oversold, neutral rating. But in general, I think it's the content providers and the people who are acquiring content who are going to be the winners.
Marc, I know that you and your wife Sandy, who was on our show a few weeks ago, you guys are frequently doing webinars. Give us a quick preview. Anything in the hopper for webinars this week or next?
Yeah, we're doing a very special webinar on Friday at 1 o'clock for people who don't want to spend more time with their family and want to get ready for the post-Thanksgiving move. So we're doing a 45-minute webinar. We're going to focus on stocks to own into year end. As you know, Sandy is a great stock picker. I'm going to talk a little bit about seasonality, and Sandy's going to zero in on stocks to own and also when to sell them. So we're pretty excited. We've done this for the last 2 years. We put in a really special offer at the end in honor of Black Friday, so and Cyber Monday. So you know, we give up our extra afternoon because our subscribers like it and our database likes it.
And where's that at? ChaikinAnalytics.com?
ChaikinAnalytics.com, and it's the first time Sandy and I have been on a webinar, so this will be pretty interesting. She's been flying solo for 3 years, and now we're going to try and put us together.
All right, check it out. And that's on Friday, you said, right?
Yes.
All right, check it out for sure.
1 o'clock.
Marc Chaikin, Chaikin Analytics. Marc, thank you so much for hopping on today. If I don't talk to you before Thursday, have a happy Thanksgiving, and we'll talk to you again soon.
Yeah, we've got a lot to be thankful here in 2017. Our message is look at what we've got to be thankful for as Americans and wash away the divisiveness. This is a great country. We've had a bull market here that's made us very whole and very healthy, and we should all be thankful.
Great perspective. Thanks a lot, Marc.
Yep, be good, guys.
All right. 8:32 now. We've got some questions from people in our chats on YouTube and in the pre-market chat. A lot of stocks and tickers people throwing at us, guys. Where should we go? Because we didn't really get to any earnings yet. It's 8:32. We kind of missed. We skipped over that. So would you like to go there?
We're doing the Bitcoin the whole show and talk Riot.
Apparently,
Riot's already up. Where's Riot?
1108.
1108 now. We should have bought it, Joel. 1070. We talked about it. Next time we got to buy it and then talk about it. We're too dumb. We don't talk our book. We don't even buy the things we talk about most of the time.
We don't buy books. I mean, what can you do here? I mean, 1108. You cleared the close net. S&P futures up 850 at 90.50, holding up near the highs of the session. Spencer, I guess we had some retail disasters. Is that what you want to go to in earnings, or where do you want to go?
Yeah, we can. Marc kind of hit on Urban Outfitters. I guess they're getting those pizza earnings because they're doing pretty well, as Marc said. But where do you like to go? Because we had Urban, we had Palo Alto, we had Lowe's, we had a lot of earnings.
We've got some disasters today, though, too. And, you know, Urban Outfitters is actually kind of a disaster in itself as well. You just mentioned it, you might as well. And you say, what do you talk about? 18 cents. It's up. It's not a disaster. This thing was $31 last night. Joel or Spencer, give us the numbers for URBN. This is significantly off the highs.
I'll give you the number: 41 cents versus 33 cents for the Q3 EPS. So an 8-cent beat. Sales of 893 versus 861 million. So a nice beat on the sales. Comps are up 1%. So a great Q3 as far as that's concerned. But that was not really enough. I don't know.
Well, it was last night for a little while, and then they decided no, it wasn't enough. Joel, how high did this get last night? I saw some high prints here in Urban.
32.
$32 this got to last night. $32. Got to $32. It's a $28 stock. Upside capitulation for Urban Outfitters.
28.45. I mean, you've seen a lot of different patterns when they have these big pops and drops, though. But the focus, if you are getting in this stock and getting down and dirty, you had a close at 28.27, another close at 27.90. So I'd say you hold that 28 even area. You have a chance to go a little bit north. You also have Friday's low at 26.82. So that's another buck drop. But was a lot more green, still staying green, needs to hold $28 here for Urban Outfitters.
Retailers are starting to show some, you know, they've been showing life for 2-3 weeks. They're starting to show a little bit of worry here again. And I mean, I think a little of this is just overdone. I mean, this Urban and Spinner's putting in perspective. This is $19 2 months ago. You know, now it was got up to $32. These things, you know, where they were short squeezes off the bat, but these things still aren't out of the woods. All these retailers are not out of the woods, and they've had a hell of a comeback. I mean, I look at GPS, the Gap. This thing is up at $30, $18 at the beginning of the year, back actually. Well, I guess it was 22 at the beginning of the year. I'm looking back to the lows in 2016. It was down at 17. But, you look at, the Kohl's has come a long ways off the lows. I mean, L Brands is another one. LB was down at $36 and everybody hated it. It's gone up to 50 now. So these things have come back a long ways. And if you're jumping into the retailers now, you are way late to the party here. Is there more, punch in the punch bowl? Maybe. But, the punch bowl was full a month and a half ago. The punch bowl's starting to get empty here, in my opinion, a lot of these retailers. So if you think, the retailer rally is just starting here now, I think you're really late to the party. You're about a month and a half too late. So I'm not jumping in here and buying these retailers up there. They've run up 25, 30% because Amazon, the Death Star is still out there. And these things aren't out of the woods by any means. And I don't think it's surprising you see a stock like DSW here today get annihilated. This thing ran straight up into the report. Everybody was banking that they were going to pull the Foot Locker. You know what the difference was? Foot Locker was sitting on the lows when they reported. And this is what we talked about. DSW had run up from 19 to 22.5. It ran up basically 15% in 4 days ahead of the report. They didn't even say anything. They were just buying this thing because Foot Locker had popped. Well, here you go. Give us the numbers for DSW, because even if the DSW numbers, it's funny, how it can turn just like that. But, we would have said a couple of weeks ago, if DSW said anything good, it would have been okay. But that was when the stock was at 18. It ran up so much, they were actually going to have to blow it away for the stock to go higher. Spencer, details on the DSW report.
Not only did they not blow it away, but then they went and missed, which will never help.
It's totaled.
Q3 adjusted EPS 45 cents versus 53 cents. Sales of 708.3 versus 709.6 million dollars. So they missed badly on the EPS, missed by about $1 million on the sales for Q3.
There you go. So DSW annihilated here in the pre-market. It's down 18%. The people who thought they were going to make 18% by buying the DSW aren't listening to the pre-market prep show, because we tell you when the stocks run up into the reports, they got to blow it away. Even if you're a retailer, you got to blow it away if you run up. And the retailers have just run up a lot lately. There's a few that haven't, but a lot of them have. Another one I'm going to give you is, just, and Joel, we can come back to technicals. I just want to do these two together. Signet Jewelers. This thing's run up a long ways too, and this thing was annihilated. And maybe it got too low back in August when this thing fell under $50. But it's come a long ways back from those lows as well. And I don't know, jewelry is just not the hottest thing in the whole world right now. I mean, you got everybody saying that Bitcoin's going to replace gold, so you got a place that sells gold, or you got a Riot stock that's investing in Bitcoin. The hot thing right now is Bitcoin, not jewelry. So here you are, Signet Jewelers. Give us the numbers for SIG.
Signet bad as well. Q3 GAAP EPS of 20-cent loss versus a 10-cent gain estimate. Sales of 1.16 billion versus 1.17. The real kicker, though, is they're lowering their fiscal year GAAP EPS guidance.
Slaughtered.
It was $7 and change. Now it's $6 and change.
Okay, remember the algorithm, guys, that I've said on the show for the entire year, basically, with earnings. If you've run up into the report, there's 4 scenarios. One is you blow it away. No, so there's 4 scenarios for every stock. One is you blow it away. One is you beat. One is you come in line. The other one is you miss or lower guidance. So when you run up into the report, there's only one out of the 4 scenarios that the stock can go higher, and that is blowing it away. SIG is the same story. It had run up $10, over $10 in November. This is a jewelry store, or they sell jewelry. Maybe it's not a jewelry store, but whatever. They make jewelry, sell jewelry. It's not Bitcoin. And that's a little bit of a joke, but at the same time, it's not hot right now is my point. So, it's run up $10 just because you're squeezing a few shorts. They need to blow it away. They did not just blow it away. They missed and they lowered guidance. So they did everything bad. Stock charted straight up into it. That equals a destruction of the stock this morning. And SIG is getting destroyed, taking it right back down to the lows we saw in October, losing the entire gain. This 20% gain that we've had in the last month. That's boom, gone. Down $13 here this morning, down 17%. That is ugly. I'm not jumping in here, SIG.
All right, let's go to the DSW first, trading down in the pre-market. I just want to alert our traders, you're kind of on basis your 15-minute chart here. You're kind of finding a buyer here at 1840, 1850 area. That's been the low of the last 2 brackets. That coincides with 4 daily lows you had at 1840 from early November. The low of the move is 17.89. So
Call
if
it
you go
18 bucks.
$18, I say we close above 18, Dennis.
Yeah, well, there's support down there, so I'm not going to come in here and short something that's another thing about shorting in the hole. Am I going to jump in here in a stock that just was a $22 and all of a sudden, boom, it's down 17%? Now I'm going to say it's actually going lower or not. There's probably a few people who are been short the stock, and they're thanking their lucky stars that the stock missed and is now trading back down to the level where it was a month ago. So it's given it back, but now you're back at support. So I'm not going to short it into support here after we were just up at the highs of the year. So 18 bucks, I'd say. I agree with you, Joel. There's some support down here. Go to the Signet chart. Give us a nice number.
There's a couple nice round numbers here at Signet Jewelers. Pre-market low stands at 61.50. You got to bounce at 63. Dennis, the low of the day is in Signet Jewelers if you want to make a lunch bet on that. Just under 61.50. You had 3 daily lows at the $61 area from mid-August. Another pair of lows at 60. I mean, and then
60 is huge.
Yeah. Well, Dennis, all the steak dinners, I owe you everything. It won't say 60 today.
Well, we're not going to, you'd have to give me odds on that because it's at 63 and going up right now. But I'll tell you, the 60 is nice support. So, and that's the one thing, Joel always wants to say, oh, we're going to go down there to support. Well, why would I be selling it at support? If I'm making you a bet, I'm basically selling it on support. That 60 is a hard bottom there. Look at that thing. 60, you got down to 59.92 on August 24th. And then you got the double bottom there from 60.02 and 59.90. I mean, there is buyers down 60. So they stepped ahead of them a little bit in the pre-market here at 61. Could it see 60 today? I think it's not out of the cards. I think it could. I think if it gets down there, it probably bounces, though, just because it's bounced there before. Takes out 60. Katie bar the door. You start seeing 59 on this thing, and this thing could see 55 in a hurry because there's absolutely nothing below it. But I think 60 holds. I agree with you. I think 60 holds. We're down 13 bucks here. We could easily fall another couple bucks and test 60. So I wouldn't be surprised if we did see 60, but I'm not selling it down there.
Yeah, 52.95.
I sell it at 59 though. Isn't that funny? I wouldn't sell it at 60, but I'd sell it at 59. Spoken like a true technical analyst. Love it at 60, hate it at 59.
All right, 59.92. If you do breach that, you got a gap to fill down to 52.95. That was probably off its August.
David B wants to make you the bet. He says he'll take it. He thinks it's going to see 55 bucks.
55 bucks today, David B?
I think if it sees 50, well, he got to give him odds. He's like 10 to 1 odds.
No, he said no odds.
Odds on that one. It's $63 right now. That'd be a bull call. Hey, if it changed $55, you should just take him out for lunch, even regardless of the bet, just because that was a really good call if he does that.
Okay. All right.
You come into the Motor City, Joel will take you out for lunch if the stock hits 55. I'll even join you. And you know what? I think, like I said, if it traded 59, you could see 55, but I don't know if you're getting through 60. There's like a brick wall there at 60.
What about all these people, Dennis, that got stuck short from 62 and change up to
that's
76?
They're bringing it in.
Yeah, I'm not saying.
Thank you. They're bringing it in. Yeah. So it could have a bounce here at 60. Lower 60s, I actually like it.
I'm not saying this because I think the company has any value at all. I'm just kind of thinking of this from an order flow perspective. And if you were just jammed in this thing, that's the only reason I'm saying it. Look at that.
And
Spinner.
You know what? Spinner, great point. He's saying 27% short interest. So Spinner's got your back on that one, Joel. Agree with you. I think if there's 27% short interest, if I was short the stock, I'd be bringing it in here this morning too. And that might be enough for it to bounce as well. Once the short's bringing in, though, then you got to think about it. But, that's a pretty high short interest, so it could take a while. Already traded 400,000 shares this morning. Big volume here for SIG. Very glad I didn't have this one into the report. Jump over here to, where do you want to go? There's a lot of big ones. Palo Alto Networks is popping. You had Lowe's report, which it was trading higher, but pulled the Home Depot, not good enough. Want to go to Lowe's?
Sure.
Spencer, LOW.
Well, apparently, not everyone's been going to Lowe's. So $1.05 versus $1.03, 2-cent beat on the EPS. That's not bad. Sales of $16.77 billion versus $16.59 billion. So a slight beat there as well. They also reaffirmed their guidance, their EPS guidance for the fiscal year.
Stock was trading up $2 last night ahead of the report, and I was like, I want to short this into it. I really do. But then I'm like, what if this guy really does know something? They're buying it up here ahead of the report. I've lost a lot of money fading people as they're buying stocks ahead of the report. Anyways, Obviously, they didn't know nothing because the stock is trade down significantly here. He could have got this almost short up at 83.5 or 83.80 last night, and the stock is now down here at 80 or under $80, 79.60. How high do we get in the pre-market?
Oh, you don't want to know.
No, really, it's one of those. $84. People are nuts. They're nuts. They were doing the Kramer. They know nothing.
Let's go to the dailies on this one. This one's had a big run up. So, opposite people that, as opposed to people being short, bringing in here. I see people sitting on a lot of profits in this one. You've already taken out Monday's low. Minor support at a couple levels for you. That would be Friday's low at 79.17. We haven't hit that yet, but I'd be interested to see what happens at 78.25. That splits the lows from Wednesday and Thursday, and then you drop into the lower 17 handle. So a lot of double and triple bottoms to lean on here. If it goes into reverse, see if those buyers step up.
Fuzzy talking about Campbell's soup. Soup is good food, just not for your portfolio. It's been one of the dogs of this, market for a long time. Started barking the last few days ahead of the report as there was some hope because we saw Kellogg's report. It got the nice little pop. Then a subsequent drop, though. We eventually started rallying again here. Campbell's back down to the lows. Give us the details here for CPB.
Yeah, Campbell's 92 cents versus 97 cents. Sales of 2.16 versus 2.17 billion dollars. So not a good Q1. Fiscal year 18 guidance coming in higher than the estimate actually. So that's good. EPS guidance is $3.04 to $3.18. About $3 was the guidance. So high on the EPS guidance for fiscal year 18.
It's down here at support. So you have, and I don't know what it's done in the pre-market. I'm going to let Joel tell you about that in a second. But I mean, $45 has been like the rock of Gibraltar for this stock. So it's got to hold 45. I think you'll find buyers here down at 45 for CPB. It's got the 3% dividend here. I don't see it going through 45 here today. How low to get pre-market?
Your pre-market low was made at 45.55. Yeah, Dennis, I'm going to give you a little bit of a range here. You're saying 45, but if you pull up the dailies here, look at all the lows between, let's say, the actual low of the move was 44.49, and a couple lows just right at 46. So the 5-star number of the day, I'd go right in between 45.5 to split those. 44.99 marks the low of the move, and that was a nice double bottom because you had 44.99 and 45.14. So for me, buy zone between 45 and 46.
A lot of other companies have the Dollar Tree report, DLTR. That's trading up to a major resistance psychological $100 level. Though, give me the numbers for DLTR because it might be a fade off 100.
Dollar Tree reports Q3 EPS $1.01 versus a 90-cent estimate. Sales of 5.32 versus 5.28 billion dollars. Comps are up 3.2%. They're also raising their fiscal year. They're raising their Q4 guidance and their fiscal year sales. I'm sorry.
Pretty good numbers.
They came out with those numbers. The Q4 guidance was good. They're raising their fiscal year EPS sales and guidance. So
dollar stores are back. I mean, this is back. Funny, the dollar store makes a dollar. Anyways, DLTR, I don't know, $100. I gotta think there's something there though, like just from a psychological perspective, or maybe an institutional order flow perspective. It's pre-market high.
102.
Yeah, and it's well under 100 now. When you see stocks trading, and it's a pretty good report, but when you see them over those big psychological levels in the pre-market, doesn't mean they're going to open over there in the regular session. Because a lot of times, the real, like I say, 90% of institutions don't trade pre-market. Why don't they do that? It's not liquid enough for them. If you've got a big position, you can't get that position off in the pre-market. Now, you might be able to get a piece of it off, but you're not going to be able to get it all off. So even if you were selling 100, maybe you're selling some at 102, but if you got 100,000 to go or more, it's difficult to get that volume off there. So in the pre-market, so there are some institutions that are going to trade pre-market. I just think the majority of them don't. And that's why you see a lot of, weird moves or changes sometimes happen, because the big money is what moves stocks. And after 9:30, when the real liquidity comes in, that's when you see the real moves. I think $100 is still, even though we traded through it in the pre-market, and that's, I believe, maybe an all-time high for Dollar Tree, or it's getting close to it if it's not. I think 100 is still the big level here. It needs to take out in the regular session. If it doesn't, I'm fading it off 100.
99.93 was your all-time high back in August of 2016. So there's your reference point, flanked by the triple digits. And this thing, all-time high here for Dollar Tree. So nice move there, keeping an eye on 99.93.
So many stocks actually that reported. So if you want one specifically, let us know. We'll go jump over to it. Another one I had on my list was Burlington Stores. BURL. That stock was trading up a little bit last night. Again, this stock ran straight up in the report. So even before we hear the numbers from Spencer, you could say to yourself, okay, well, it's straight up in the report. They got to blow it away for it to go higher. So 1 out of 4 scenarios, it goes higher. 3 out of 4 scenarios, it probably goes lower. What's the number, Spencer?
70 cents for 65 cents. Sales of $1.14 billion, which was the estimate. Q4 EPS guidance, $2.02 to $2.06. $2.09 was the estimate. So they came in a little light on the Q4 EPS guidance. Other than that, Q3 was mixed. EPS they beat, sales they met. So
not good enough. And that's why the stock's down a little bit here in the pre-market. It's trading down $1.65 straight up in the report. That being said, the stock is one of those that's loved. I think anytime you get in the lower 100s with BURL, you probably find buyers here.
10012, that's your pre-market low. And you got to
get down there too. You know what? I need to start trading all these earnings reports, I think. I need to be up. What time was that at?
That was up when you were up, Dennis. Between the 7 o'clock bracket, the 7 and 7:15. But it didn't trade much stock down there at all.
I'll tell you. You know what's the trickiest thing though? In hindsight's 2020, because when you trade these things off the earnings report, sometimes it's 10 points wide, and you're looking at it and you're like, okay, it's not like when you're wrong, there's no out. I mean, when you're trading an earnings report, and it's easy to say, oh, why didn't I buy that at 100? Well, maybe the best bid was $95. Maybe you miss something in the report, and it's like, you buy that thing at 100, and you're looking at a bid at 95. It's like, ooh, and all of a sudden starts trade 95 on you. There's no out. So it's not like in the regular session, when you're trading something that you can, hit the bid that's 10 or 20 cents down. A lot of times when you're trading them right on the earnings releases, they're 10 points wide, and that means the difference between the bid and the offer is $10. So it's hard to just come in there and just be a buyer at $100, even though it looks good on the charts, because the next bid might be way down at $95. So there's a lot of risk.
Let's see what happens at 104.55. You've had a nice bounce up. Someone has an opinion here just at 105, hit 104.99 in the last few brackets. Yesterday's low, 104.55, and then your 2-day low is way down at 101 double. If it goes into rally mode, you can look for sellers again at the old-time closing high at 106.55. That was the all-time closing high. The all-time high, 106.89.
Ace talking about CLSN. This stock was one that got some love last night from Oppenheimer. And man, I cannot believe this now. This got upgraded, or just got initiated with Oppenheimer, outperformed last night with a price target of $9. It was a big price target. It was traded up to 250, like on that, release last night. I was like, I'm not chasing this thing up 30 cents. Man, I wish I would have chased it. It's now up. It's at $3.44 here now. So holy cow, a little love from an analyst. Boom, it's up 60%.
Trading at the highs of the pre-market session, 358, and they are throwing some volume around. Nearly 400,000 shares is traded in that last bracket. Pre-market high, 358. You're gapping into a gap area. If we really can hold this momentum, folks, maybe look for $4. I see how many lows here. 1, 2, 3, 4 lows between 385 and 414. Let's call $4 your resistance in CLSN.
A crazy move just off a rating change. I know it's a big price target, but holy cow. Is there anything else on this? I'm looking. I don't see. I think it was just the Oppenheimer.
Yep.
I'm looking
just a
here.
note.
Wow. I don't know. Anyways, okay. Well, they like the $9 price target. What other ratings here? We can come back to the earnings if there's anything. But there was a few other ones here. I know Deere is due to report tomorrow morning, and it actually is catching an upgrade here today at Baird. That's new all-time high for DE. I mean, this stock got killed last earnings report. Quietly has come all the way back, and we know what that means, guys. What does that mean?
It means they got to blow it away.
Got to blow it away to go higher. So especially if it's going to run up and challenge this 140 level, I got to go look in the book. Do you think there's something at 140? I think there's going to be something at 140. I'm going to the book right now. Joel, give some technical thoughts.
John Deere, bold call made by the analyst here, trading up 228 in the pre-market. That's far and above your all-time high, which was 137.82. That was made in yesterday's session. So call old resistance, new support here. Major support down at yesterday's low at 136.14. So in the stratosphere.
Well, I'll tell you in the book, there's 38,000 shares at 140. That's a lot for a $140 stock. You know, you're talking about stocks trading 9,200 shares only in the pre-market. I think it struggles to get through 140 here, at least off the bat. Takes out 140, then it opens up a bit. But that's, I think, going to put a lid on it for the first try up there. So I look at that 140, it looks like resistance to me.
All right, some stocks coming from our YouTube channel. Let's just do real quick technicals, ignore the fundamentals on these. Dennis, do you want the first crack at ExxonMobil?
ExxonMobil. Haven't looked at it for a little bit here. $80. You know what? Exxon's interesting here now. You know why? Because this was a stock, you know, and I had it in my investment portfolio for a long time. I sold it at 89. It's a stock I could scalp basically and get it back. Oil looks better to me though, doesn't it? Like oil, you know, it's been coming on, it's been coming up. ExxonMobil has been selling off, and it sold off pretty hard, you know, over the course of, you know, the last couple of weeks here, despite oil really holding on. But you know what I like about it, and Joel might point this out too, this is a perfect 50% retracement. And, you know, I'm not a big fan of the fibs, but when you look at this, you know, September, late August, you had that hard bottom put in at 76. Then you put in a hard top over the course of November, 84. Well, the air math's pretty easy on this one. 8-point move up, 4-point pull back. We're at the 50%. And we bounced off the 50% yesterday. This is a clean technical setup. I kind of like the XOM at $80.
Not only did you bounce off 80.01 yesterday, in Thursday's session, 80.14, Friday session, 80.16, institution stepping up here.
They like the 50%.
They do. They do. They also listen to the pre-market prep show or the blockchain prep show.
Yeah, we're changing our name to the pre-market prep blockchain show. And you know what? We'd have like 1 million listeners. We'd be the most popular show on the web if we changed our name to blockchain. How's Riot doing? Let's go check it out. How's Riot doing? I gotta go look. 1040. Oh, it come back down 1050. So got up to like 1120. It's back down to 1050. Are we buying the pullback on Riot? You jumped in there, Joel? You jumped into Bitcoin. You like this Riot? Give me a Riot.
What's the close?
1040 now. We're getting it cheaper.
Yeah. What a discount.
Back up 1050 because we just mentioned it.
Also, Dennis, comments on TLT. That's just coming from our YouTube channel.
I haven't looked at it like on a technical basis. I tell you, I watch the TLT every day from a day trading perspective, just because when the TLT is up, financials are usually showing weakness, and when the TLT is down, financials are usually showing strength. You just want to look at it from the TLT. You take this one, Joe.
Okay, easy. This is super easy one.
Easy.
127. You had a pair of highs at 126.78 and 126.80 from November 7th and November 8th. That also posed some resistance in late September before it fell out of bed. Last couple sessions came up shy at that area. So above 127 here, clean breakout, tight range from yesterday, trading up 36 cents. But that 127 level is the hurdle. And finally, XLV coming out of the YouTube chat. And XLV, your healthcare. This one's looking interesting too. We've came off hard off the 84 level. We've been in a range between 80.5 and 81.80 for since November 7th. I mean, I try. Oh, Dennis, you sound skeptical.
I'm not liking it. You know why? It's just out of favor right now. And I see a head and shoulders there jumping right out at me. The neckline, we're hanging right here at $80. If we take out that low, and it's a little bit lower, if you go down to that $80.44, you know, about $1 down from where we are. I know we're up a little bit in the pre-market here. You take out that 80.44, I think you can see $7, $8. So you know, I have a lot of biotechs in my portfolio, a lot of drug stocks, still like them all long-term investments. Technically speaking, right now, a lot of them just are broken. I mean, you got Merck breaking down here. We know Celgene's had a rough go, you know, as of late. Biogen's is kind of hanging here. I think there's more pain for the drug stocks here in December. December is all about, it's the month of continued momentum. You know, it's one thing I've learned over my 18-year career is what is strong gets stronger in December, and what is weak gets weaker in December. And that is, you know, exactly, you know, a little bit of window dressing mixed in with a little bit of tax loss selling. So that being said, biotechs have not had a good few months here. I think you could see some selling, continued selling in December. And in stocks like GE, I think you see selling, continued selling in stocks like that in December as well. And I think you can see continued buying in stocks like Square. I mean, Square, every single day we come in, we've been talking about this on this show for 2 months. It's the one stock we have got dead right on this show. SQ up here again this morning. It's up 1.5% or 1.6% on no news. You were joking this morning when Square's only up 75 cents. It's like a down day for Square. That's the kind of stocks you want when they're moving like that. Now, you know, is it lofty? Is it going to have like a 10% pullback here? Yeah, it is sometime. You know, nothing goes straight up without actually eventually having a pullback. But we're coming into the month of momentum in December, and I don't know. You know, we're still got a little bit in November. It's got to be, you know, cautious when the first analyst gets, you know, on board and says, you know, something negative about it. It could start to show some weakness. But this SQ has been a monster train, and if you're on the train, I think you continue to ride it.
Does Square have an imbalance today by chance?
Go check it out. I haven't even looked at imbalances here. And here we are a minute after the show. We're giving you a bonus time. Of course it does, Spencer. 326,000 to buy in Square. It's one of the biggest ones I've seen. SQ is just a monster stock, man. That thing is just a monster. Ever since they said they were accepting Bitcoin, it continues to be a monster. I wish I would have put it in my investment portfolio. I trade it every day, and I trade it long usually. So I've been making a lot of money in my trading portfolio on it. I wish I would have stuck some in my investment portfolio and forgot about it. Alibaba, 291,000 to buy. Everybody last night was hitting Alibaba because Muddy Waters came out and was talking about, you know, them cheating on the numbers. But Muddy Waters was saying that last week. So it got hit last night with about, you know, 7:30, 8 o'clock because Forbes actually wrote up an article on the Muddy Waters thing, and they were hitting it down. It's right back up. You can't keep Alibaba down. BABA is back up here again. 297,000 shares to buy in BABA. Financials are showing a little bit of strength despite the strength in TLT, and that's always interesting, although much, 27 cents. 212,000 shares to buy in Bank America. AT&T, we know we've had we didn't even talk about the AT&T Time Warner saga there going on. AT&T came out and obviously, you know, defending and saying we're going to fight, you know, try to get this deal to push through. AT&T is down this morning. It's got 115,000 shares to sell this morning as well.
All right. That is our show for the day, folks. On the docket for tomorrow, Dave Weinke, new guest. Joel, he's a former floor guy, correct? Joel's not here. That's okay.
I'm here.
Okay.
I'm here.
Oh, you left
Just
already?
on you.
Because
I'm sorry.
Joel left.
Wait, I don't get paid at 9:02, guys.
You're done. Joel cuts his mic off at 9 o'clock. He's gone.
All right. Never
Drops
mind.
the mic. I'm out of here.
Never mind then. Okay. Dave Weinke on the show tomorrow. If you want to catch any part of today's show, if you missed it or you want to catch it again, you can do so on the podcast, iTunes, SoundCloud, Stitcher, or youtube.com/BenzingaTV. Thanks to our guest, Marc Chaikin, today. Thank you to everyone who joined in the chat at YouTube or at PreMarket.benzinga.com. Have a good rest of your day, folks. We'll be back with you on Wednesday.